Time now for top picks from Keith Richards. Top pick number one is something that Keith mentioned right at the top of our conversation. That's cash. You remain in your fund about 30% cash.
That's right. Yeah, Paul, we started off way back in the spring when we saw our first signs of a bear market at pushing 40%. I think it was actually pretty much exactly 40. Went to 36. Now we're 30. We had a little bit of positive, like I said, coming out of our risk model, but not too much positive. It's still in the high-risk zone, but less high risk. So we bumped a little bit. We also started averaging into some of our commodities, like gold and whatnot. But we're still pretty bearish. Like you got to go with the trend. And the market is heading down. It's still below its 200-day moving average. All that stuff, so we can't go all in.
So a couple of questions. What currency do you hold your cash in, and how do you recommend our viewers hold cash if they want to? T-bill funds, et cetera, et cetera.
High-interest savings accounts.
Money market funds,
yeah.
GICs?
Well, not GICs, because the thing about, like, we keep it liquid, and we keep it in just Canadian funds just because it's, we're Canadians. But we want the access to be able to, if something changes, like if the market breaks through its 200, it almost tried a week ago, right? So if it breaks through its 200 and it can stay there for a few days, I'm going in, like not all in, like, but we leg in. We go one step at a time, we go in, we wait, So do you want to be committed to something like a GIC? Probably not, but a high interest savings account or a money market or just cash, just whatever. I'm more about preserving. I'm not trying to make a whole bunch of money on the cash.
Okay, let's go to back to the world of stocks. Top pick number two is a very familiar stock to viewers of this program and investors in Canada more generally. Barrick Gold, ticker symbol ABX on the TSX. Now, we've talked about gold. We had a question from a viewer on what tool you would use to gain exposure to gold, and this is one of them, Barrick Gold.
Yeah, that's right. So we have a position in an actual gold ETF, and we also hold two producers, Barrick being one of them. Barrick is kind of the big mama. I mean, its issue right now is, you can see the highs are lower at this point, so are the lows. So we're not, we're still a little cautious on it. Oops, okay, but yeah, thank you for the 1 year, because you can start to see that it's beginning to act like the underlying, the gold itself. Now, again, specifically, I know with Barrick, they are hedged out at around $1,800. So they need to actually have a price around 18 or more to start actually making money. That's as much fundamental as I will talk, okay? I'm more about the charts, but there is a better look to the chart right now. So it's not a reason I put it on my picks, because I think it's actually in a point where I could say, yeah, this, I'll look good on the show 3 months from now or whatever, because it'll probably be a bit higher. So, and I like gold also because if you look at the US dollar versus the world currency, that FCX or whatever they call the index, it's been trending down since August. Gold and the US dollar are inversely related. They're negatively correlated. So in other words, if the US dollar continues to weaken, you will see gold go up.
Certainly has not been a buy and hold stock over the years and indeed over the decades. Barrick Gold in 1998 was priced at about 30 Canadian dollars per share, and it is priced now at $22 per share. Nutrien is the final top pick, a stock in a sector we have not talked about yet today. Ag.
That's right. So this is, these guys do potash, they're like Mosaic in the United States. So, they were on fire, and recently they're consolidating. You could say, well, that doesn't look like an uptrend anymore, but actually, if this is actually so far looking like what's called a right angle triangle or a triangle consolidation. So we feel that if you draw a logarithmic chart, you'd see the trend line better, but it's not broken its longer term trend line. It is consolidating, and the fundamentals are actually not bad. They went through, the reason the stock is off a bit is, and again, this is as many fundamentals as you're going to get from me, but a lot of their customers, the farmers and whatnot, had overstocked on their product, the potash. Well, their inventories are running down. So there's going to be a point where they have to start stocking up again, and we feel with what's going on in Russia and whatnot that there's a good case for this stock to go up.
Let's bring that graph back one more time, that 5-year on Nutrien. What I see there is a series of lower highs through 2022. Why are you not concerned about a pattern of lower highs?
Well, you're absolutely right, and that's why I mentioned that the longer-term trend line is good. It is. In my view right now, yes, on the near term, it's trending down from a short-term trend, but in a bigger picture, it's on the uptrend, and this is a fairly common-looking consolidation pattern. Now, if it breaks its trend line and it stays below the 200, then I'm out. So, it's really just all about what's it doing. I don't have any love of any stock, but so far, I think it's likely to bounce off this trend line, but if it doesn't, we'll sell.
Okay. Thanks a lot for coming by, Keith. We hope to have you back in less than 3 years from,
okay.
from now.
Every 3 years, it'll be a party.
Make that a promise.